So now 17 past the hour, let's get to news about your money. Consumer Price Index released earlier today. And the big headline showing inflation rising 2.7% on an annual basis. That's lower than estimated. Wall Street reacting in a big way. The Dow is up 400 points, but booming. Wow. Stephen Miran, North Lawn, chairman of the Council of Economic Advisors, he's got a finger on the pulse for here. And Stephen, thank you for your time and appreciate you coming on today. Good morning to you.
Good morning, and thanks for having me. It's great to be here.
Let's go over the numbers first. What do you see in those inflation numbers, CPI?
I see inflation that's running pretty well behaved. Inflation is tame. It's, consumer price inflation is running at a 1.9% annualized rate since the president took office. And that's an example of the effects of the president's profoundly disinflationary policies of deregulation, border control, energy abundance, and tax incentives to boost capital stock. That's all very powerful in bringing down inflation, and you're seeing it start to work.
If there's one suggestion that under the hood, some prices are rising, and that could be a result of the tariffs. Do you see that?
Yeah, so I don't see that at all. Let me say a couple things about that. Yeah, I don't see that at all. Let me say a couple things about that. First of all, what went up this month in this month's report, in terms of contributions, was used cars and airfares, and neither of those are particularly traded things. We don't really import those from abroad. More generally, you have seen some relative increases in some goods categories, and that will always be the case. This or that good or service will always become more or less expensive relative to this or that good or service. But in aggregate, there's no evidence of it. What has gone up has also gone up internationally too. The same goods prices increases that we saw in very small scale in the United States, very small scale, you saw at similar scale in other countries like the UK, like Canada, like Mexico. Goods prices in the U.S. are running at a similar rate as in Europe. So there's just very little ground to stand on to sort of think that tariffs are any meaningful driver.
Can you say today that trend that you just laid out for us will continue, or is it built on sand at the moment?
Well, like Yogi Berra said, predictions are difficult, especially about the future. But, what I can say is that there's no evidence thus far of it. And we ran this experiment in 2018, 2019, in the president's first term with his historic tariffs on China at that time. And the same Cassandras that were saying doom and gloom, there's going to be inflation, a recession, the world's going to end. All that stuff was said in 2018, 2019. There was no evidence of it then. There's no evidence thus far now. We've been doing tariffs in this administration since January 20th. Remember, we started with Canada, Mexico, and China from the get-go, and there hasn't been, it's now over 6 months, and there's still no evidence of it whatsoever. So the burden of proof is definitely on the naysayers here.
Okay, Yogi Berra, spoken like a Yankee fan, I do believe, in the background there perhaps. EJ Antony from the Heritage Foundation. The president fired the head of the Bureau of Labor Statistics about 10 days ago. EJ Antony apparently will get the nod. Do you know him? Is he the right call for BLS?
So I don't know EJ personally, but what I can tell you is the president has selected one of the most talented economic teams in history. And you look at the accomplishments of this team. People like Secretary Bessent, Secretary Lutnick, NEC Director Kevin Hassett, Jamison Greer, the trade ambassador. They are just raking in the wins one after another, whether it's restructuring global trade and getting other countries to pay us to accept tariffs of 15% or something. Passing the One Big Beautiful Bill and the massive tax incentives there for investing in America, the most aggressive deregulatory campaign in history, and an energy abundance agenda that's brought down gas prices and energy prices for ordinary families, right? There is just win after win after win on this front, and the president has such a great history of selecting talent, not only in his his businesses that were very successsul, but also in government. So I have every confidence in that ability again here.
Stephen, with all respect, I think the question was whether or not you can trust the government numbers. Do you trust the numbers from BLS? Because clearly the president does not.
Well, look, I think there's a good reason for being suspicious about the numbers. They've deteriorated in quality in recent years. There should be no question about that whatsoever. If you look at some types of revisions to the labor market data, they've increased by about 60 to 70 times relative to the rate that they were running before COVID. So there's been declining quality of the economic data, declining reliability of the economic data, and larger revisions. Now, that's something that can and should be fixed. And I'm very, very happy that the president is taking a proactive approach to improving the economic data because we rely on it. We rely on it here in government to make decisions. We rely on it in financial markets. Ordinary businesses rely on it too. Everyone needs to have a good sense of what's really going on in the economy. And I'm really delighted that there's going to be a strong, proactive, and aggressive approach taken to fixing this data.
Okay, so I hear a little bit of hesitation in your voice as if maybe the numbers weren't as solid as some people within the administration had expected. That to the side, is that a fair read, yes or no?
Well, there was one of the biggest revisions in history that we just had, from the jobs data a couple weeks ago, right? So I don't think that's in an uncommon view.
Well, there are some big decisions that rely on that data. I know you're well aware of it. Last hour, here we go. You're about to be appointed to the Federal Reserve. And the president shot this note out about Jerome Pal. Jerome "Too Late" Powell must now lower the rate. The damage he's done by always being too late is incalculable. Fortunately, the economy is so good that we've blown through Powell and the complacent board. Do you agree that Jerome Powell is too late in lowering rates?
Look, as you know, look, I'm extremely honored by the president to be nominated for this role, but that nomination is going before the Senate. And so I'm just not at liberty to speak about the Fed at this moment. I have to let the Senate do its job. But what I can say is what I said before, which is that inflation has been extremely well behaved. And all of the concerns that have been expressed about inflation in one way or another, whether it's the border policy or tariffs or something else, none of them are panning out. Inflation has just been very well behaved since the president took office. And our disinflationary policies of energy abundance, of deregulation, cutting red tape to make it cheaper to make stuff, of closing the border, of tax incentives, right? These are all working their way through the system. I mean, think about it. The previous administration threw millions of migrants into a relatively fixed supply of homes. That drove up rents. Making it more expensive for people to make their weekly rent bills and the cost of living much, much higher. We've put a stop to that, and we're putting it into reverse. And so I really expect inflation to be very well behaved in the future, and I really do think that the burden of proof is on the doubters because it has been well behaved.
Last question. Leave Jerome Powell out of this argument. Would you have lowered rates if you were on the Fed in July?
Again, unfortunately, I'm just not at liberty to comment on interest rates with the Fed at the moment because the nomination is going before the Senate.
Stephen Miran, thank you for your time. We'll follow your nomination. Thanks for coming.